Semiconductors are the heartbeat of modern technology, powering everything from your smartphone and electric car to artificial intelligence and national defense systems. But here is the thing, you don't need to pick individual chip stocks to profit from this surging AI trend. There is a smarter, low risk way to invest in the future of technology. It is semiconductor ETFs. In today's video, I'll share with you the 5 best semiconductor ETFs to buy in July 2025, carefully selected based on performance, exposure, innovation, and future growth potential. These ETFs give you access to the biggest chip maker in the world, like Nvidia, Taiwan Semiconductor, Broadcom, and AMD, and also fast rising players working behind the scenes in AI, 5G, quantum computing, and more. Whether you are a long term investor or just getting started, these ETFs offer an easy and diversified way to tap into one of the most critical sectors of this decade after the internet boom. For each of these ETFs, I'll break down the key details, including their expense ratio, assets under management, top holdings, and diversification, and also the future growth potential. Let's start with SOXX, iShares Semiconductor ETF. It is a well-known, beginner-friendly semiconductor ETF from iShares. This fund gives you access to 30 of the largest US-listed semiconductor companies like Nvidia, Broadcom, and Intel. It is highly liquid, trades millions of shares daily, and is backed by BlackRock. So you are getting strong credibility and smooth execution with an expense ratio of 0.35%. It is not the cheapest on this list, but the liquidity and long-term consistency make it a solid pick. SOXX is great if you want a reliable, diversified semiconductor play with proven performance. So why pick SOXX? It is managed by BlackRock's iShares. It is solid, diversified, and liquid. Great for both beginners and long-term growth investors. Next is SMH, VanEck Semiconductor ETF, the largest semiconductor ETF out there, with over $25 billion in assets under management. This fund is built for serious exposure to chip leaders with heavy bets in Nvidia, TSMC, Broadcom, and AMD. Just like SOXX, it charges 0.35%, but it tends to have a stronger focus on the top players in the industry. SMH is perfect if you believe in the strength of big chip makers driving AI, data centers, and cloud computing. If you are bullish on the giants of the chip world, this one deserves a spot in your core holdings. So why pick SMH? It is the largest semiconductor ETFs by assets under management. It has excellent liquidity and a strong exposure to industry leaders. Next is SMHX, VanEck Fabless Semiconductor ETF, and this one is very interesting. SMHX is focusing only on fabless semiconductor companies. These are firms that design the chips but outsources the manufacturing. Think like Nvidia, AMD, and Marvell. This model reduces capital expenses and focusing more on innovation. While SMHX is still small in terms of assets, it gives you unique exposure to the brains of the chip world. If you are looking to bet on innovation and R&D heavy companies without the burden of owning factories, SMHX is a smart focused option for growth investors. So why choose SMHX? It is for the kind of investors who want to invest in fast-growing chip design companies and cutting-edge technology without the risk of running factories. Next is SOXQ, Invesco PHLX Semiconductor ETF. SOXQ is your low-cost way to invest in semiconductors. It gives you exposure to the 30 biggest US chip companies, very similar to SOXX and SMH, but with an ultra-low expense ratio of just 0.19%. That's nearly half the cost, which makes a big difference over the long run. It is still growing in size, but if you are a cost-conscious investor looking to hold for 5 to 10 years or more, SOXQ gives you top-tier exposure without eating into your returns. So why pick SOXQ? It has a best-in-class expense ratio for long-term investors. If you want exposure similar to big ETFs, but at half the cost, it's a standout. Finally, we have XSD, SPDR S&P Semiconductor ETF. It has a completely different flavor. Unlike the others, which are weighted by market cap, XSD gives equal weight to every company in the portfolio. That means smaller players get the same spotlight as the big names. This ETF is great for investors looking to discover the next breakout stock and reduce concentration risk. It has more exposure to mid-cap and even small-cap chip companies. If you want a more balanced portfolio and a chance to benefit from upcoming semiconductor stars, XSD is one to look at. So why XSD? It is ideal for investors who want broader exposure beyond mega caps, potentially capturing breakout winners among smaller chip companies. Now here is a quick side-by-side comparison to help you decide which ETF fits your strategy the best. SOXX and SMH are both solid core holdings with strong liquidity and similar expense ratios and exposure to top cap semiconductor giants. SMH edges ahead in size with around $25 billion in assets, while SOXX offers a slightly better dividend yield. Then there is SMHX, a smaller but focused ETF targeting fabulous chip designers, ideal if you are betting on innovation and high growth potential. SOXQ stands out with the lowest expense ratio at just 0.19%, making it a great low cost alternative for long term investors. And finally, XSD gives you an equal weight approach, which means smaller and mid sized companies get just as much exposure as the big names. Perfect if you are looking to diversify beyond the usual tech giants and tap into the hidden gems. No matter your risk appetite or investment horizon, there is something in this list for everyone. So there you have it, the 5 best semiconductor ETFs to consider in July 2025. Whether you are looking for low cost exposure with SOXQ, innovation focused growth with SMHX, or a balanced approach like XSD, there is something here for every kind of investor. Semiconductors are going to power everything from AI and robotics to space technology and smart cities. So positioning yourself early through ETFs is a smart, low-risk way to benefit from this digital transformation. That's all for today's video. If you found any value in this video, don't forget to hit the like button and subscribe to the channel. See you in the next one. This video is made for informational purposes only.